The oil market has been incredibly challenged over the last several months. Oil prices were in the realm of $60 a barrel going into early 2020, and they plummeted to as much as minus $38 a barrel, which is through the looking glass in a sense, and hardly a sustainable position to have negative oil prices. But that was temporarily possible just because there was nowhere to store the excess oil being produced. I'm happy to say oil prices are not negative anymore. In fact, we've seen something of a rebound. And so oil prices spent some time in the $10 to $20 a barrel range. And now West Texas oil is actually up into the mid 30s. And so has staged quite a considerable, if incomplete, rebound. And so I think it's worth thinking for a moment about how that's proven possible. And it's been really a combination of supply and demand factors. And so on the demand side, for instance, we do now see more car driving occurring. Apple mobility data tells us quite clearly people are actually driving a surprisingly normal amount in many countries. And so that is reviving appetite for oil and its products. We can also see a significant increase in air travel, though still at very low levels is probably the right way to frame that. And so that's also increasing demand for fuel. The supply side has been no less relevant, though. And so, for instance, initially we saw Saudi Arabia and Russia resolve their spat and cease their overproduction. Then we had OPEC Plus cutting oil production by 10 million barrels. And since then, Saudi Arabia has committed to a further reduction in its supply. And we've also seen non-OPEC players do some cutting as well, just organically in response to low prices. We've seen Canada cut quite a significant fraction of its output. And U.S. drilling is now down to the lowest level since the early 1990s. And so there just isn't the expenditure being made to find new oil or to produce existing oil at unprofitable levels. And so this has helped oil prices to revive. It has helped oil inventories to stabilize, albeit at high levels. So all of this is a substantial improvement. However, it is still quite rough going for oil producers and oil-oriented economies like Canada's. It's still a position in which oil is much less profitable than it was. It's still a position in which the capex that was associated with oil, previously a very big chunk of many economies, really just isn't happening. And so we still expect this to be quite challenging over the next several years, but a little bit less so.